Hi, I'm Mark McKay. Welcome to I Can't Turn 55. I haven't saved enough for retirement. Marcy is actually out hiking the canyon. I'm pointing right at the canyon. It's right there. We've got a gorgeous day in the Panhandle here. We've had rain lately. The wildflowers are amazing. We've seen all sorts of wildlife everywhere, including snakes and centipedes and scorpions. But it's beautiful. But I wanted to get this video posted, and we've had several requests for it, and people asking when we were going to get it uploaded. But we have an amazing interview with one of our favorite guests, legendary investor Jim Rogers. If you're not familiar with Jim Rogers, he was a fixture on financial talk shows, television in the 80s. Very successful hedge fund manager, money manager. He's the creator of the Rogers International Commodities Index, which is up 47% over the past 12 months, I believe. But he's the real deal, and he's also I think he'd rather talk about. He's set several world records for travel. He traveled over 100,000 kilometers on his motorcycle across Asia. He circumnavigated the globe in a custom-made Mercedes SLK. Let me see if I can show that, because even if you're not interested in protecting yourself against rising taxes and crashing stock and bond markets, he does a great job of chronicling his trips. So there's the car they had made for the record-setting tour. So check that out at jimrogers.com. And also, we are looking for people with cash value in their life insurance policies, and we're designing case studies for our tier one arbitrage system, and we've it works on a wide variety of people, but we want to use real world numbers. So if you have a whole life policy or an IUL that has a cash value, and you're willing to let us use that for case design purposes, we give you a free case design with your specifics. We'll change all your information, but then if we actually end up using we'll need an in-force illustration for your insurance, but we'll give you some sort of a gift certificate for dinner, or autographed copy of Marcy's book or Jim's book. Anyway, let me know if that's something you're interested in. It would really help us out. And see on paper how, without taking any additional risk, we're able to provide people with double-digit returns tax-free without stock market risk. So stay tuned. We are going to be interviewing legendary investor, traveler, entrepreneur, author Jim Rogers. He's going to talk about coming to a Sod Poodles game, hanging out with T. Boone Pickens, honky tonking in Amarillo, Texas. So let's get right to it.
I told you last time, I've had good experiences in the Panhandle, Amarillo.
Well, I was trying to remember. Were you here when you were in the military?
No. I rode my motorcycle across America once, and we went to a honky tonk in Amarillo, which was fantastic.
Okay.
And last summer, my daughters said we must drive across America. We don't know about it. So we drove from the Atlantic to the Pacific. And T. Boone invited us to his ranch. We didn't go, but we did stop in Amarillo. We went to see Amarillo play Tulsa, my daughter's first baseball game, and Amarillo won.
Nice.
So, no, I have great memories of Amarillo and the Panhandle.
Yeah, well, that's neat. You should have gone and seen T Boone's place. I've heard it's
Well,
pretty
I know
impressive.
my daughter said to me, okay, now I said, you planned the trip, you want to do this. So she said, okay, and I want to meet a Texas oil tycoon. Oh my God, are there any left? So we went to see T Boone in Dallas.
Okay.
And wound up spending, oh my God, 2 hours with him. We thought we'd meet at 10 minutes. We all had a wonderful time. And he kept insisting we come to the ranch, but we just couldn't organize it. So we didn't. And now, of course, he's dead. We missed it. So, but we had a wonderful 2 hours. And at one point, he was telling us one of his stories, and I I guess she was 11, piped up and said, wait a minute, Mr. Pickens, isn't that arbitrage? The whole place stopped, dead silence. This little blonde-haired, blue-eyed girl said, that's arbitrage.
I bet that made his year.
It made mine. Are you kidding? It was my daughter. I was shocked. We were all shocked.
T-Boone likes his arbitrage. He probably owned that pretty.
No, I know. I mean, God, he was a wonderful guy. I'm sorry.
We actually had an engagement dinner at T-Boone's house. He had moved to Dallas, but he had just moved out of this big sprawling estate he had put in North Amarillo. So
that was 30 years ago.
That was 31 years ago.
I was going to say, when you get newlyweds?
Yeah, no, far from it.
But that's that's our part of the world. Where his ranch is about 100 miles north of here, but it's a neat place.
What is happening? I presume nobody can buy it. Nobody's rich enough except T-Boone. Is there anything happened to it?
I haven't seen any listings or heard any talk about it. I wouldn't be surprised if too long you'll get some of the California hedge fund people might they've got a pretty good presence in Santa Fe and Taos and in southern Colorado, which is not that far from here. So. If you get a hedge fund manager who likes to quail hunt, then they'll be in good shape. But
I know a lot of people are leaving California for Texas for good reasons.
Right.
So who knows? Who knows?
Yeah.
Of course.
Well, I'd much rather tell these stories, but I know.
Let's go. Yeah, let's go.
The listeners.
Now, Marcy, are you going to be on the show too?
I am.
Hooray.
She's color commentary. So,
Okay.
She's pretties up the place. But we have about 2.5 years ago, we really started focusing on protecting our clients against, one, we knew that this endless printing of money was, somebody was going to have to pay the piper at some point. And so we've got these trillions of dollars in these tax deferred accounts tied to the stock market, which are, dependent upon the economy. And I think that you're coming upon a perfect storm. And at some point, they can't lower interest rates, but we're starting to see some of the effects of that. We're in cattle country, we're in oil and gas country, cotton country. So, we've already, a lot of our real estate people are feeling the effects of lumber prices. But where do you think, we're obviously seeing the signs of inflation. Where do you think that's headed? And, what do you think people should be looking at at this point?
Well, Mark, throughout history, when you've had staggering amounts of money printing, it's always led to inflation. Now, maybe it's different this time. The Treasury Secretary, who has 2 Ivy League degrees, says, don't worry, we have it under control. We're not going to have economic problems ever again. Well, if you believe her with her Ivy League degrees, then don't worry. I happen to have read a lot of history, and I know we're going to have many more problems. I know that inflation is coming back. It's going to get worse. It won't go straight up. Nothing goes straight up or straight down. But inflation is coming back all over the world, and it's going to get worse. I mean, I wish I could say, oh my gosh, thank goodness for the Ivy League. I know better. Better.
I've heard that from a lot of those types throughout the years, deficit hawks and they always justified by, well, as long as GDP is growing at a faster rate than the debt, it's good. Debt is working in our favor. But I pull up the debt clock and I get a panic attack when I see the debt to GDP ratio at 128%, because that number being over 100 doesn't make sense to me for as long as it's been, there.
Right.
or
There are enough studies that show that when you get deep in debt, you cannot grow as fast, maybe short term, but you cannot, because you got this debt hanging over your shoulder. I mean, this is simple history. These are simple facts. I don't particularly like it. We're all American voters, taxpayer, and everything else, but still, facts are facts.
You know, one of the things that I've found to be somewhat true as far as Wall Street maxims is the market can be irrational longer than you can stay liquid. If you know if we know it's going to crash, so I've given up on that game, trying to hedge when the next big correction's coming. But
Correction.
yeah, correction. So what are
Yeah.
some of the we have a saying that's when Wall Street feels like the retail investor has too much money and they correct that problem. So,
Yep.
you know, we've seen bubbles like this, but what are some strategies? What are some asset classes that are attractive? We know that at some point taxes are going to have to go up. Nobody's really got the fortitude to come out and say we're going to raise taxes. So I'm not sure how they're going to do that, but we've got $28.5 trillion of debt, and a $3.5 trillion deficit is really hard. I remember when the debt clock had to have the extra space put on it because it went to a trillion. So seeing the deficit, just this, you know, it's going to burn a lot of people. And so what are some asset classes that people should be looking at these days?
Well, first, Mark, I want to tell you it's good to be old. It's good to be an old American because we don't have to pay for it. We don't have to pay for it. Unfortunately, I've got young children, and the problems they are going to inherit are going to be staggering. You know, in the 1920s, the UK was the richest, most powerful country in the world. There was no number two. 50 years later, they were bankrupt.
Yeah.
IMF had to fly into Heathrow to London airport and bail them out. That happened from number one with no second to bankrupt in 50 years. So it has happened before. It has always happened, and it's going to happen again, whether we like it or not. Now, as far as assets, well, if you look around the world, bonds are definitely in a bubble. Bonds have never been this expensive in the history of the world. Never in history have bonds been this expensive. Property in many countries is becoming a bubble. If you go to Korea or New Zealand or many parts of America, property is in a bubble. It's clear. It's very, very clear. If you look at stocks, many stocks are becoming a bubble. Samsung goes up every day. Apple goes up every day. Tencent goes up every day. Not everything. The reason I'm not getting out of the stock market is because there's still many stocks that haven't gone up. Once everything is in the bubble, I mean, I see signs of a stock market bubble developing, then we'll have to get out. The only thing that's not in a bubble are commodities. I mean, Mark, silver's down 50% from its all-time high. Sugar's down 70% from its all-time high. Oil is down 50% from its all-time high. These are not bubble kind of numbers. So commodities are the cheapest asset class. But if you don't know anything about commodities, please do not start investing in commodities. For goodness sakes, if you want to survive all of this, stay with what you know, nothing else. Don't listen to me or some guy you see on the internet. Maybe you could listen to Marcy, but don't listen to most people. But unless you really know what you're doing, do nothing.
Well, I learned that lesson the hard way. In the early, when I was in high school, I saw that we were going from the biggest lender nation to the biggest debtor nation. And I started thinking, okay, well, this has got to drive up gold prices. Well, it turns out as 17-year-old Mark did not have the capital to maintain the margin calls until gold prices went up. And, you know, I had to wait till my next birthday to get the grandparents' money before I could, you know, meet my margin call. So I did learn that lesson the hard way. But so in an inflationary environment, it would stand to reason that things like oil and sugar and even silver, which is in so many different you know, manufacturing processes that involved with technology today, that those asset classes will do well. We may not have a lot of retail investors in this part of the world, but that deal commodities, but we have a lot of you know, people who do it as part of their business from you know, from an agriculture or energy standpoint. And
Well, now you can buy commodity ETFs listed on the stock exchange, so it's a little bit simpler. You don't have to go and buy cotton futures anymore. I mean, you can buy some ETFs, and that makes it a lot simpler. But if there's inflation, that means the price of shirts goes up. Well, if you own cotton, you make money. You know, if the price of bread goes up, well, if you own wheat, you make money. You survive and you make money when something like that happens. But again, you must do your homework. You must be prepared. You must know what you're doing.
What's your take on ESG?
ESG?
Well, I'm not enough of an expert on it.
No, I know what it is. I just want to make sure I heard you
I'm
right.
just saying, is that going to be a burden on corporate earnings?
Of course it is. Of course it is. But it doesn't matter what I think is right or wrong. It's here, and many people love it and are adopting it and adapting to it. So you have to take that into your consideration if you are in business or if you're an investor or anything else. Whether it's brilliant or absurd is irrelevant. It's coming.
Right.
Yeah. Well, you mentioned earlier that a lot of the Wall Street types will say, well, it's different this time. And which they'll say every time when they're trying to justify inflated P's, you know, or 128% debt to GDP ratio. But I think it is different this time, but not in a good way. You know, we've got so many different factors. We have such a huge level of debt. We've got things like ESG. You know, the market is aware of what's going on like it hasn't ever been in history.
Market is different. America is the largest debtor nation in the history of the world. We have never been the largest debtor nation in the history of the world before. And I will back to what I said, every country that's gotten into this situation eventually has had a crisis or a semi-crisis. I don't like saying it. I will repeat, it's good to be an old American. It is not good to be a young American in 2025, 2030.
Well, it seems like Washington is a bunch of reckless teenagers who are being rewarded for bad behavior.
Yeah, I mean, I wish they were teenagers. Maybe we could discipline them. You know, maybe we could teach them.
Right. Ground them and send them to their rooms.
You know, I think it's obvious what's going on today that taxes and at some point some sort of a market correction against multiple asset classes is a concern that people, you know, if you're 10 years or less from retirement, you know, I just think that and I know we've been sounding this horn for a long time, but it's when you start to see signs of inflation with these levels of deficit, I think it's time to you know, at least have a plan when it comes to your assets.
You must have a plan, and you must know what's going on. You must listen to Marcy and Mark to know what's going on. So if you know what's going on, you're going to get worried. And if you get worried, you'll get prepared.
Exactly.
And then you might come out of all of this okay. I mean, there were people in the 30s who came out rich out of the 30s. Most, of course, lost everything. But if you know what's going on and you're prepared, many crises have happened in world history, and many people have come out of them very, very successful. So just do your research, know what's happening, and stay with what you know, and maybe you'll come out rich. I hope I come out solvent. I hope I come out rich, but at least solvent, if nothing else.
Exactly. You know, I think I've kind of got the gist of the debt situation and the stimulus. I want to hear. I've teased this a little bit, and just briefly, can you tell us the Woodstock story again? Because I'm afraid I'm missing some of the details when I relay it, so I want to get fresh.
Well, I was sitting in New York working on Wall Street. Woodstock took place. I heard about it, read about it, raced and jumped on my motorcycle, and the highways were closed. Everything was closed because it was a serious emergency, you know. Nobody had any idea. They sold 15,000 tickets, and suddenly 500,000 people showed up. They tore down the fences and everything. I rode my motorcycle right up to the stage, crawled under the fence, and it was a hot day. And the security guard, I mean, everybody was volunteering at this point. And so
Right, right.
I put on a security jacket, which I still have, by the way, and crawled up on the stage. And I was a volunteer security guard for the Woodstock
Okay.
Fest. They fed me. Oh my gosh, it was a miracle. There was Janis Joplin right over there. You know, people would try to crawl on the stage. I'd say, get back. You cannot come up here. You know.
So how long were you there?
I was there for 2 days, I guess. I got there on Friday night and I left on Sunday night.
Because
It
you
was
had
a
to
3
be
or
back
4
at
day.
work?
I had to go to work. Yeah, I got back to work on Monday morning, and they were talking about it. I said I was there, and they looked at me like, "What? You were there? Those horrible people?" You know.
That's excellent. I was doing a little bit of research and I didn't realize this, but you're originally from Alabama.
I am indeed. I'm from a very small town in Alabama, in the backwoods. My phone number was 5 when I was growing up. That's not a typo. That's not a typo.
Is it Demopolis?
Demopolis, Alabama, and the phone number was 5. Now we have dials. We have dials in Demopolis, but in those days there still were no dial phones.
Yeah, that's our son is giving Parkinson's to roundworms in Tuscaloosa this summer, so we're a little bit familiar with.
Wait, your son is doing what?
He's on a research fellowship from the Parkinson's Foundation at the University of Alabama, and they've got a Parkinson's research laboratory there that he's part of.
And you said he's giving roundworms?
Roundworms have a very short life cycle, but a very similar DNA to humans. So they test protocols, Parkinson's protocols on roundworms.
So they're infecting the worms with Parkinson's, trying to find a cure for the disease.
Well, I hope your son sorts it out before I get Parkinson's, before we all get Parkinson's.
Well, yeah, my mother has Alzheimer's, so we're hoping he makes some head. They're working on neurodegenerative diseases, but yeah, we all kind of hope that. But
Well, my town is about 60 miles away from Tuscaloosa.
Yeah,
very neat. Well,
it's a lovely town. We've had a great
but it's
time. when we
it's a
go
long way
visit.
from Singapore.
Yeah.
It is a long way from Singapore. There's no question about it.
Yeah, we just watched the sun go down over the rim of the canyon, but it's
Well,
10
they came
o'clock in
up
the
here. While you were watching it go down, it came up here.
morning. I wondered where it was going. That's
It came to Singapore.
yeah. Well, Jim, thank you very much. This has been a great chance to catch up. I've watched so much of your stuff lately that I've kind of parroted a lot of it, but a lot of the themes that we've been focusing on with a $3.5 trillion deficit is really hard for me to wrap my head around, and with we're seeing inflation. That we don't know what the tax front is going to look like here in the next few years. So I think it's more important than ever for people to protect yourselves against rising taxes, rising inflation, or deflation, which, could be an issue, or an even scarier prospect down the road. But
Mark, you mentioned before that there was a $28 trillion debt. That's what's on the books. Off the books, it's a couple of hundred trillions.
Yeah, we posted a slide the other day of the unfunded liabilities, and if that doesn't keep you up at night, so it's a good thing my son's pre-med.
Well, I am delighted that your son is dealing with the Parkinson's problem, but somebody's got to deal with the debt problem. I mean, your son is still young.
Yeah.
He and my children are going to have a gigantic, horrible problem to deal with. I mean, I've seen many countries get into this situation and they all go into decline. I mean, I don't like saying it.
Right.
But it has happened repeatedly throughout history. Nobody's ever gotten this deep in debt and come out and said, "Oh, let's spend some more money, and we'll solve the problem of too much debt with more debt."
Yeah.
Never worked in history.
Right.
And
There's a reason why history keeps repeating itself.
yes, but one of the problems, Marcy, is that most people don't learn the lessons of history.
Right.
You can sit and tell them this is history, and they, first of all, they don't care and they don't listen and they don't understand. And
Right.
even if they do say it doesn't matter, it's different this time,
Right.
or they say, I'm smarter than history. I can deal with, well, I'm not smarter than history. I know that.
Well, and a lot of middle class investors just stick their head in the sand because it is so confusing, and there's so many they're getting so many biased messages. One, but they're getting conflicting messages. So it's scary out there.
Well, as I say, if people will do their research and figure and learn, get some knowledge about what's going on, they will get worried. And
Yeah.
then hopefully, if they get worried, like the two of you, they will start doing something about it instead of just saying, oh, don't worry, it'll be hope. We have an Ivy League Treasury Secretary. Don't worry, everything will be okay.
We've explored the revolving door of Wall Street and Washington and the Ivy League and gold. There's a lot of people saying the same message and agreeing, and it's a lot of them getting rich and not a lot of Main
Listen,
Street.
they care about themselves and their jobs. They really don't care about my children or even your children.
Right.
Your children are older. No, they care about keeping their jobs. They care about the short term, and they say, well, let's do whatever we got to do to keep our jobs.
Yeah,
They don't particularly care about my children's jobs.
Yeah. Well, on that exciting, happy note.
Okay, guys. Well, I hope the next time I'm in the Panhandle, I can see you. I see you.
We would love to take you there. We're 5 minutes away from some pretty good hiking and exploring.
Well, I want to go to the honky tonk.
We'll take you to eat a 72-ounce steak if you're up for it. But
best honky tonk I've ever been to in my life was in Amarillo. It must have been 30, 40, 50 years, long time ago. Let's go to the honky tonk.
We'll do it. We'll scoot a boot.
Okay, very, very good.
Jim,
Thank
take
you,
care.
guys.
Give our best to everyone in Singapore.
Okay, hooray. We'll do it again someday.
We enjoyed it very much. Thank you.
Bye-bye. Bye-bye.
So thank you for joining us. Always a great visit with legendary investor, world record traveler, Jim Rogers. If you've got any questions, and once again, we are looking for people with, if you've got a cash value life insurance policy that you'll let us use just for illustration purposes. We need those real world numbers for our case study designs, and it'd help us out. We'd make it worth your while. But great interview. Thanks again to Jim Rogers for, granted, a lot of what he said was scary, but it's better to be scared and protected than happy and wiped out by the market crash. So, because you won't stay happy. But anyway, give me a call. Let's set up an appointment. We can visit and see if there's some ways we can protect you from $28.5 trillion of debt. Thanks a lot.